inventory valuation techniques. Because if the organization has got poor inventory management, such an organization, its ongoing concern might be very difficult. That's why we started by looking on the inventory. So it is very important for us accountants to make sure that we take care of the inventory, and the inventory we manage it accordingly to the required international financial reporting standards, so that at least the organization can able to prosper, can able to achieve its objectives. Then we go on and look on the measurement of inventory. To say we value inventory, we select the lower between the NRV, net realizable value, and the cost. So we will consider the lower figure. Then we went on and to look on the FIFO, how if the organization is using FIFO, how does the organization value its inventory, the opening and the closing stock. The closing stock, if you are using FIFO technique, and the closing stock when you are using the average weighted method, then we say LIFO is not allowed according to IS2, the standards, because LIFO, IS2 does not allow the use of LIFO. Those are some of the key concepts which we dealt with on the last concept. So it's very critical to understand that inventory is the key for the organization to function well and for the organization to produce the desired required. So as an accountant, we should understand that it's very critical for us to understand the issue of IFRS 2, which is inventory valuation. Anyway, today I want to look on the departmental accounting. Departmental accounting, if you find out, all of us who understand, some of us have been working, some of us who are still to work. If you get into, for example, into TM supermarket, you will note that TM supermarket has got some departments. It's got a butchery department, bakery department, and other departments. So it is very critical for us as accountants to understand this, because each department sometimes it incurs its own costs, but other costs and expenses they are shared. For example, if you look like electricity usually can be shared, which means that a department cannot on its own able to come up with the actual amount of electricity used. So you need to understand that the department accounts is very critical for us to make sure that each department has got prepare its own profit and loss, its own financial statements at the end of the period, so that the management, we have an autonomy, so that the management can able to make decisions, sound decisions, so that no managers will be wasteful, so that every manager is responsible for his own costs and the profit generated. So it's very critical to understand that the departmental accounts are very important, so that at least it becomes very easy for costs, allocations, and other relevant aspects as they required by the financial accounting. Okay, we'll just look on simple items here. Let's look on the simple items here. So we are saying, for example, we should understand the key concepts. One, we should understand what we mean by direct costs and indirect costs from the previous learning. Direct costs, they are simple because they are directly attributable to a certain department or a certain functional organization. But indirect usually, indirect costs usually they need to be apportioned. When they are apportioned, because I'm talking about indirect costs like heat and light. I talk that is electricity usually. The organization is to apportion this electricity, both the indirect what costs. So because of that, we're supposed to come up with the method of what apportioning such costs. So that is very critical to understand that because of indirect costs. Because, for example, I told you of electricity. If you look at TM, there's a butchery, there is a bakery. But at the end of the day, the department, the management should come up with an allocation method, how to allocate those indirect costs. For example, can note that maybe the bakery might use more power because it's going to bake, it's going to use more electricity for ovens and other items as compared to the butchery. So the management should come up with a sound decision in in coming up with the cost allocation methods. So it's very, very what important to understand that. Let's look on this one. Here we are given an example whereby assume that the gross profits and losses on business department here were as follows. We have got department A, B, C, D, E here. The gross profit we all understand from the previous studies. When we are doing financial accounting 1A, you know how to arrive at gross profit. Gross profit, we only concern usually about the turnover less a cost of what of goods sold. Here we are now excluding what? We exclude other general expenses. So here they are saying department A is 40,000, then B 30,000, then C 50,000, and E has got a loss, then E has got a profit. E. Okay. Just hold on, I'll come to you for just a few seconds. Okay, thank you for your patience. Thank you. Let's continue on. I was saying here, the department D has got a gross loss of 80,000, then E a profit of 6,000. So what it means here, we are saying this department D is not performing well, that we can arrive at this, but we should look on. So it means if the department are like this, there's A, B, C, D, and E. A, B, C, and E, they all made profit. So automatically it means the management will now investigate the reasons why we have got a gross loss of 80,000 so that they can come up with a sound decision and can come up with measures so that to reduce the loss. But if, let's say, we say 180 minus 80, we've got a gross profit of the business for 100, this 100 pounds. What does it mean? It means this department D can relax. And to see the idea, it will relax, taking that everything is fine, but while the department is not doing well, which is not is not commendable. Then here, so this means that measures should be taken. If it is possible, the management can decide even to close department D, or to come up with other, or to change the management, or to come up with a proper investigation so that this department can also contribute to the profit. Or this department might be a department which supplies other departments. Maybe it's not a profit center, it's a cost center. So it might be very difficult. So you need to come up with a full investigation to make an informed what decision. Then, because they are saying if we remove department D, which means that we can make a large profit of 108, the company on its own can make a profit of 108, but because of D, the profit is what has been reduced. So, but here we now go into the net profit. So here they are saying, but if we close department D can be closed because it's making a loss here. We could make a greater total gross profit of 180,000. Perhaps we could replace department D with a department which would make a gross profit instead of a loss. So that is very particularly important. Why it is important to do a departmental what? It's another reason which is important to find out which department is making what profit and which one is making what loss, so that each department is responsible for its own expenses and CAD. That is very critical. We go on to the next one. Here, gross profit excludes indirect costs. Indirect costs, we understand we've got other costs such as lightning, heat and light, we've got depreciation of assets, and so on. Those are not included. We find out that accounting information it becomes useful when the users or can able to interpret and can able to make decision from that. That is very, very important on that. So the overall profitability of the business, usually net profit, will arrive it after taking care of the indirect costs. So what we need to understand is that the management on their own, after they've come out with this information, the management now will come up with the allocation of other expenses, like what I'm saying to say, because we have got other expenses such as usually, let's say we've got expenses such as heat and light, you've got expenses such as insurance, rent, and so on. Those are indirect costs. So the management will come up with a formula. For example, what I earlier said, might find that the bakery department has got a potential of using more electricity than a butcher department, because the bakery department will be included in baking, roasting, and other activities. So that is the problem. That's the method which will be formulated or implemented by the management to say, no, we cannot share 50-50, but maybe this one, the department which utilizes more electricity, can be allocated, can be apportioned more percentage, more expenses on power. So we need to understand that. Okay, before we go further, if you want to discuss on how it is important for the organization to come up with the departmental accounts, other than to come up with just overall profitability, because overall profitability can mislead. That is the problem, because even some managers, they can relax because they know that the other department will cover up for them. And again, the ability of the organization to succeed or to prosper or to do well, it can depend entirely on the ability to utilize the given resources on the department. That is very important for that. So the profitability, the department on their own, they can compete. So when they are competing, it means the organization has got a potential to generate more revenues and to generate more profit. So that is very critical. Okay, any question before we go further? I think I tried to give you some practical examples. Let's discuss any question. Boys, this should be practical because some of us, we are going to meet these items. We are going to operate, we are going to be managers, maybe at gas, at OK, maybe at Wheel of the Motor Industries, whereby we've got departments such as machining, assembling, and so on. So you need to understand these are very critical because we are going to be management accountants, whereby they will depend on you. You'll be find out that if you arrive there, they will depend on you to say you should be, you are somebody, you are a consultant, so you should be able to understand what is important. Why is it very important for the management to have a departmental accounting? Any question before we go further? Any questions? Okay, let's go where to wind up as time goes on. Okay, then you let's look on the allocation of expenses. On the allocation of expenses.
Yes.
The expenses of the business are often split between various departments, and then the net profit of each department is calculated. Like what I said, to say we are supposed to split the expenses. I had already said those expenses are going to be split depending on the organization criteria, the management criteria. Some departments, they might be allocated more expenses than others, depending sometimes on the usage. So each expense is divided between the department on what's going to be the most logical basis. Like what I've said here, the logical basis, there's no way you can share 50% on catering department and 50% on the butcher department. It becomes so not fair. Because generally, if you're talking about the electricity, the catering department requires more electricity. Unless maybe the catering department is using other alternative method of electricity. For example, maybe gas, the use of gas other than electricity, gas stoves. Maybe you can try maybe to share, but this is on a logical what basis. So it is very critical for the accountants to have a rational mind which can form a informed decision on a logical basis. That's very critical. Let's look for the example here. Northern Store says 3 departments. The 3 departments for the Northern Store, we have got jewelry, we have got hairdressing, we have got clothing. Those are the 3 departments. Which are what? These are the 3 departments which we have here. Then here we have got stock of goods or materials as at 1 January 2008. That is 20,000 here. Then purchases 20, 15, 30. Purchases 110, 30, and 150. When you're purchasing, we're talking about the purchasing of what? Of the stock. Stock of goods or material at 31. So 1 January 2008, this one is our opening stock. This one is our closing stock. The stock at the beginning, that is our opening stock. Then the stock at the end, that is our closing what? Stock. Then sales and work done. 180, 90, and 270 respectively. Then wages of assistants in each department. Then the wages of assistants in each department. This one is 28. This one is 50th. This one is 60th. because they need to pay what? To pay workers. That is very critical. If you don't pay workers, it becomes a bad problem, because these workers, they produce, that the ones who are directly involved in the production of goods and services. So you need to pay those assistants. The following expense cannot be traced to any particular department. If you cannot trace this one, they are saying cannot be traced. What do we mean? We are saying there is no department which is directly responsible for that particular expense. For example, rent. Usually, rent can city council rent. Maybe you are renting that to another organization, maybe to Old Mutual. You can just pay the rent for the overall shop. Like here, the rent is 8,200. But on that rent, there are 3 departments which are using that building. That the jewelry, the hairdressing, and the clothing. Then the administration expenses. This one is for management. Those management, they incur the expenses which are incurred for the management and supervisor and others. Air conditioning and lighting. Since this one jewelry, everyone will need air conditioning. Air conditioning, sometimes it works when it is cold. You can increase the, you can reduce the temperature, and so on. When it is cold, you do the same, or when it is hot, you do the same. General expenses which can the department can incur against the organization. So since they are not on this issue, they are saying you cannot trace directly to any department, which means that they become indirect costs. How do you deal with indirect costs? For example, rent. That's why they are saying you need to use the logical basis. Sometimes they can give you how do you allocate rent. On this situation, rent, sometimes you can use to say the area occupied. We can say the area occupied. To say if you occupy more area, it means they are supposed to pay more rent. Maybe you've got a building which has got 100 square meters. But you can say those departments which use more space, they should pay more. Okay. So they're saying here, let's say the cost of rent together with air conditioning and lighting, in according to the floor space. The floor space, to say it's normal. If you want a bigger room, you pay more rent. A small room, you can pay less. That is normal. It's a logical, a common sense, which we know, all of us. If you want to rent a room and the room is big, you are likely to pay more funds. But if the room is too small, might likely to pay what? Under normal, all things being equal, you are likely to pay less. These were taken up in the ratio of 1/5, half, and 3/10. 1/5, half, and 3/10. Administration expenses can be split in the ratio of sales and work done. So what it means is it means 1/5 the other department when they are sharing air conditioning and lighting plus rent, then half for hairdressing and 3/10 for clothing, which is 1/5. It becomes 2/10. Half becomes 5/10. 5 plus 2, 7 plus 3, 10/10 becomes 1 whole. That is 10/10. So that is the method which is used by the management. Like what I earlier said, to say you cannot share to say department A maybe has got a larger space, uses large space.
Hello, sir, we cannot hear you.
Okay, sorry, I muted. There was something here, there was a disturbance.
Okay, it's fine.
Sorry. Since we are recording, I muted so that there was a funny noise. There was a funny noise across here, the building which I'm using here. There was too much noise for traffic. That's why I muted. Okay, let's continue here. So here we're saying, because we are saying you cannot allocate 1/3, 1/3, 1/3 equally, because some of the departments may require a more floor space areas than others. And some departments, again, they might require more air conditioning and lighting. So that's why I say you need to be logical. That's why, let's say, the management decided to say 1/5 for jewelry, then half for hairdressing, then 3/10 for clothing when they were sharing. So the cost, this cost, the first cost here from this point to this point, this one they will be directly attributable to a particular department. There is no apportionment, which means that jewelry on its own will be is responsible for these costs, and hairdressing the same, clothing the same. But when it comes to the rent, administration, air conditioning, lighting, engineering expenses, that is where we are going to use these given ratios. So here, if you are now preparing the trading and profit loss account, we pick these figures as they are. We pick the sales. Here we start by sales and work done. 180, 90, 270. We are deriving from this. These are the sales. 180, 90, 270, and so on. Less cost of goods or raw materials. Opening stock. I said opening stock. That is at the beginning. That is at 1 January 2008. That is the opening stock. Then 8 purchases, as usually purchases here. Then less closing stock at the end of the year. That's 31 December. That becomes our closing stock. Then after that, we have got our gross profit here. Then these expenses which are supposed to be shared, but this one for wage assistance, they've been clearly stated that these ones, they've been each department is responsible. So we pick as they are. We only allocate the costs which are indirect, which are not directly related to a particular department. So we'll be starting at rent. Rent, that is 1/5 for jewelry. That is 1/5 of 8,200. The same here, that is 3/10 of 8,200 for hairdressing. Then 3/10 of 8,200 for clothing. That is why we have got 164 for 100 and 2,460. Then administration expenses here. Again, administration expenses use the same formula. These ones, administration can be split in the ratio of sales and work done. Here, quite in the ratio of sales and work done. So what do you do? The ratio of sales and work done. Sales and work done. So you say 180 plus 90 plus 270. If you have got 180 plus 180 plus 90 plus 270, the amount which you are going to get here, then you are going to say 180 over that amount times the administration expenses. For example, if we add 180 plus 90, that is 270. 270 plus what? Plus 270, that is 540. So 540, if you want administration for jewelry, the expenses under administration, we are going to say 180 divided by 270. That is 180 divided by 270 multiplied by the administration expenses of 48,000.
Se apa patifanira kuti 180 over total here.
Sorry, over total. Sorry, over 540. Thanks for that. It's over total. That is 540. So it's 180 over 540, which is I think it's 1/3 of this. So 1/3 of 48,000. That is 16,000. Then this is 90 over 540, which is 1/6. So 1/6 of 48,000. That is 8,000. Then this one 270, it's half. So half of 48, that is 24. Yeah. So sometimes just you need to follow the Queen's language. That is the English. What they are saying, they'll give you what to do. You are being told what to do. So what you need to do is to understand, to say administration expenses and general expenses are and split in the ratio of sales and work done. That's why we started by adding the sales and work done here, 180 plus 90 plus 270, that is 540. So it means 180 over 540 times the administration expense 48. That is 90 over 540 times 48. That is 270 over 540 times 540. So 270 over 540 times 48. Then you get these figures. Air conditioning is a 1/5, half, and 3/10. So this one is simple. So you just say air conditioning in 1/5 of 6,000. That's 1,200. Half of 6,300. Then 1,800. We get it after we are saying that is 3/10 of 6,000. Then general expenses here. General expenses, the same as what? Administration expenses. So general expense again, we are using the same formula, which is 180 over 540 times 2,400, which is 1/3. Which is 1/3 of 2,400 is 800. Then the next one, which is 1/6 of 2,400 is 400. Then the other one is half of 2,400, which is 1,200. Then we now have we've allocated. But what you need to do for reconciling purposes, you should make sure that if you add 16 plus 8 plus 24, you should come up with 48. The same 1.2 plus 3 plus 1.8, you should come up with 6,000. 800 plus 400 plus 1.2, you should come up with 2,400. You've allocated these ones according to the what given information accordingly. So you can now come up with the net profit and loss for each department after you have done the allocation. Then the net profit is 32,206 for jewelry, then minus 500 for hairdressing, then 4,000 540, which means that the hairdressing is a major loss of 500. So the management will sit down and investigate the reason for that loss. Then you find out that all in all, the organization could have made a profit of 32,600, 32,306 plus 4,540. But because of this loss, the organization's profit is going to be reduced by 500. So which means that the department can want, the management can carry out an investigation so that the corrective measures can be done. Okay, before we go further, can we discuss any question? Any question? Any question?
Yeah.
Any points which need clarification before we move forward on how to allocate costs to various departments, how to allocate indirect costs?
Hello, Mzidzisi. Mubvunzo
Bvunza henyu.
uripo ndambobisa izvozvi futi yatonetsa. Okay, handichiripo. Ndanoda kuziva kuti aya mafractions epamaratio aya mayawana muchishandisa chii? Is it flow area here?
Apa taita like tapiwa handiti. They gave
Yamawana
us, these were
kuti
taken up in the ratios 1/5,
allocate kuti
half, 3/10. We given 1/5, half, 3/10
tapiwa.
tapiwa. Then
Okay,
these ones that were
in the
given
event
for,
yekuti hatina kupiwa.
then hatina kupiwa. Yeah,
Oh,
correct.
that.
Handiti. Let's say are not given handiti. Sometimes you can be given the floor areas for, let's say dwellers, they give you a floor area, hairdressing for floor area, then clothing for floor area. Then you can add those floor areas. Then you can say dwellers floor area over total area times what? The given cost. Like here, administration expense and general expenses, they say they should be split in the ratio of sales and work done. So when to sales and work done, then we add 180 plus 90 plus 270. Then after that, the total was 540. Then we went on to say 180 over 540. Sometimes they give you, so if they give you the cost driver, that was called the cost driver, then you can use that cost driver to determine, to allocate. But on this situation, it was simple because I think the examiner will be very lenient on this situation sometimes, because the examiner is to provide you with what? With the given ratios which were used to determine the costs for each department. Are you answered?
Yeah.
Any other questions? Any other questions before we go further?
Hello, say.
Hello.
Yeah, ndanga ndisina kunzwisisa pa reason yema administration and general expenses. Calculation yacho ndanga ndaibata yekuti tinoedha ma figures awo. Saka ndazoona kuti ndanga ndisina kuerenga kuma notes kuti pakanzi split in the ratio of sales and work done. Saka muri kutsanangura apa ndazozvinzwisisa ndabva ndapabata. Thank you so much.
All right, thank you if you've understood. Thank you.
All right.
Any other questions? So sometimes vanokuudzai kuti muno splitter say, they will tell you how you are going to split them. So what you need, if they tell you, you need to, that's why I'm saying you need to understand the English sometimes to say how are you going to allocate. Then if they're saying source and work done, go source and work done, then you start by what? By adding the total here. The total, use the total as the denominator. Then you say this one over the denominator multiplied by the cost of what? The administration expenses. And the same towards general expenses. Any other questions? Hello? Yeah, breaking. Hello? Hello, can you start again? You're breaking.
network yangu patient vanhu vamwari pane mubvunzo pane question yandatombona iziti paitem number 1 or 2 pams
Question, that's the question E. Exhibit 38.1, that's the question which we're doing. Hello?
ndati pane question yandanga ndichida kubvunza zvangu patanga tichita zvegross profit zvino network yazombondibuditsa ndaida kumboibvunza zvangu question yakatonyorwa kunzi sei tisingacalculate is it using net profit here?
Okay, let me go ahead. I think I saw it. Why do we think we have only mentioned gross profit and haven't referred to net profit? And active 38.1. Is that?
Pane yataisa yepamusoro apo ndazongobudiswa nenetwork ndandine mubvunzo ipapo.
Yeah, around the activity 38.1.
Ndokumbira kuti muise page racho kuti ndibvunze mubvunzo wacho webhozi wakatonyorwa.
Ndawisa, esa page racho.
Marita.
Network yenyiri fast. Fananga mchiona page yeyo.
Oh.
They were, and yet they were only saying because they wanted to find out which department, those before we go on to direct costs, to indirect costs, sorry, the organization should be able to come up with the profit of each organization. How are you performing on your own? Because the net profit is got a problem that we are now including the indirect costs. We have distributed costs to departments. But there are some costs which are not directly attributable to a department as its own. The department, they are usually to arrive at net profit. Like here, we arrived at net profit after allocating some of the costs to the department. Are we together?
Yeah, matopa answer. Inyaya ye allocation inofana kutanga yaitwa futi so that tinofana kuzoita a certain net profit kana kuti net loss inenge yaitika at a particular department. Mapa answer amenoti vamwe vangu vapanzwa here.
Kuti mwe nomwe ombomira nezvake pokutanga. Wakazvimirira senhengo inokwikwidza on your own.
Yeah.
Then from that, now we go on to the costs which are supposed to be shared, which are supposed to be apportioned. Sometimes we can throw you away to say, you're not doing it anyway. Before we go further, the next stage, you say, you're making a loss. Before even allocate any direct what, any indirect costs, you make a loss. Hello?
Apa mukutaura kuti inonzi patinotanga kushandisa gross profit tiita yekuti as an individual then kana yani
Department should be autonomous, should be on its represent on its own the costs and gains and the profit generated by that particular department be accounted independently.
all right.
Because all right, let's say you have 3 managers. Manager of jewelry, manager of hairdressing, manager of clothing. So what you want to find, you can now say the manager of hairdressing maybe is not doing well, but it's for competence, so that the department, you can say the manager of jewelry is doing well, or the manager of clothing is doing well. Then if we need to take corrective measures, we can go to hairdressing, which is making a loss. But at first, this can be determined by each department having a responsibility for its own costs and the revenues generated. Are we together?
ya zvinotopinda muchiramba muchitsanangura so handikutoramba ndichijekerwa.
Because some people, they are lazy. You might find out maybe the hairdressing department, they are lazy. Okay, I'm coming to you. Let me answer this phone.
Baba chimbotsanangura ikazoma michaura peteni
gross profit net profit up. Manzwisisiro andaita ndeyekuti tiri kuti isusu departments are SR3. Let us treat using the gross profit. Why not the net profit? We want to ascertain about the expenses. My expenses ndo vari kunzi no. Rimwe department rinoshandisa magetsi chaizvo. Rimwe harishandise magetsi. Ndamboya nezvema expense. Ora ngatimboti zve gross profit zvacho. Toti toda kutsvaga profit ye department rimwe nerimwe. But tikamhanyira kushandisa net profit ko rimwe department kana risinga perform well ndo patinotanga taita allocation kuti tiziwe kuti iyo gross profit yedu yatawana iyi department A iri responsible ne profit yakadi ko B ko C tichitarisa ma expenses nezvese zvine zvangotaurwa kunzi let's say magetsi kana chichi zvine zviripo panyaya pa business redu.
Alright, thanks Wanguzvabatika.
Continue, I think you were explaining well.
Madhoka rova chimuti mudhara vanorasika vana.
It was explaining well. Okay, let's continue. So I think you now understand how do we allocate. So it's very important for you. I'll share with you this book. I think people they now understand how do we allocate these ones. So allocation of expenses. There are many methods which can be applied. Some they can use to say according to they can use to say like we were saying floor space. Some they can use maybe according to the number of workers to say how many workers are there. Some they can be maybe used according to the number of hours to say that this department maybe has got spent 19 hours, uses 19 hours of electricity during the day. Other department maybe 2 hours or 3 hours. So it depends on the management's criteria or the management's logical reasoning. We don't just do it, but it's what it depends on the management's logical reasoning and criteria. Because if they fail to do that, some people they are lazy. They don't work. You might find out that other departments, instead of working, there are other managers. They will be aware that or even wasting. They don't even control costs. They'll be knowing that these costs are going to be shared. But if you are responsible for your own costs, you work because they are going to be answerable. So it's very critical to do that. It's very, 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 very critical to understand that. Then sometimes we might have an interdepartmental transfers. Sometimes we might have an interdepartmental transfers whereby the departments they can. So usually these days, because of the modern world, some managers they encourage department A to charge department B for a profit. Nothing is for free, even if the same company. You might find out that, for example, let's say you've got a car making company. You might have a machining department, which is responsible for the machining. Might have a molding department, then the assembling department. You might find out that the machining department can sell to the molding department. Then the molding department can sell to the assembly department. But it's the same company. And they sell at profit. So that each department is responsible for what? For making profit. Then the assembly also what? Will sell the final product. So that is the sometimes so interdepartment transfers. Purchases made for one department may be subsequently sold in another department. In such case, the item should be deducted from the figure for purchases for the original purchasing department and added to the figure of purchases for the subsequent selling department. So, if they are saying, you find out that the department on their own, if they are selling to each other, this should be accounted for, so that they becomes what? The department becomes competent. That is very critical. It's very, very, very critical to do that. Because we are aware of us that once we relax, the other managers, some people they don't want to work naturally. And some people they are wasteful. They don't want to utilize the organization's resources accordingly. Then at the end of the day, we create a problem whereby they find out that maybe the company is no longer what making profit as expected. Is expected. So what you do when you allocating those when you are preparing your final account, you find out that when you are preparing a final account, for example, here let's talk about the snowing stores. We can have a situation whereby we start by department and department. Then at the end of the day, we take each and every department. Let's look at this method of contribution. The contribution here, that is, we are talking about we are talking about the costs and less the variable cost, the cost which differs to the department. Then here we are find out, let's say for the stores, these are the contributions for this one. Then after we've got the contributions, then let's if you need just to don't want to allocate each department by each department, then we list the what the cost here. Then the total here, it means we have got the cost generally. They maybe want to report to the outside. There is difference between sometimes internal reporting. This one is good for us for internal purposes. But let's say you need now to report to the other stakeholders. Sometimes there is no need for allocating like this. Because usually when you are now reporting, they need the whole company as it is to say they know the source as it is. So you can come up with the figures, add everything here, then you add everything, then you add everything, then you add everything, then you add everything, then you come up with the totals. The same here, expenses here, you come up with, you just write the total cost because they are now reporting. For example, you find out when Econet is reporting sometimes, Econet has got many subsidiaries. It's got EcoSure, EcoLife, and Eco something. But at the end of the day, when the group is now reporting, it will come up with the total figures to report outside. But we, as management, for internal report, we might need to find out which department did well and which department did not do well, and what are the reasons, and the investigation should be carried out. But sometimes we find out that all departments, for example, here we are now talking about all the departments here. We are now taking the gross, the contribution for each department is this one, then we add is 137,000. Then we less rent is it total, administration is it. We are not allocating everywhere. Why? Because sometimes we want to report to the external stakeholders. So it is very important to know many methods, but this one is very critical for the purpose of managing and controlling, because costs need to be controlled. Let's go here where they are saying in examination, students must answer the question as set and not give their own interpretation of what the question should be. So if the examiner give details of the methods of apportionment expenses, I'll go back here. So use that method of apportionment expenses which are given by the examiner. Don't create your own, that they are really looking for an answer at the same time 38.1, which we said that. However, if you are then asked to comment on the performance of individual departments, it would be wise to indicate that a contribution approach being adopted, a different views of their performance may have been obtained on this case. So be very careful on this one. So if you are given methods of apportionment of expenses, follow that one. Don't use your own methods. I repeat this one. In the examination, please don't use your own methods if you are given the apportionment of expenses. I know sometimes we can think, we can have brilliant ideas, more brilliant ideas than what the examiners gave us, but don't do that. Use what has been given. You get a 0 mark, you don't get any mark for that. Then the balance sheet. Balance sheet, that is our, usually that is our statement of financial position these days. It does not usually show assets and liabilities split between different departments. This one, it's clear. So if you are preparing a balance sheet, does not usually show assets and liabilities split between different departments. So in the statement of financial position, it means the assets should add the total assets is there. If it is the closing inventory, it means you should add the closing inventory for the whole department, for the whole for the shop as it is. Let's say our stock 3112 is this one. You need to add 30 plus 25 plus 40. this is our closing inventory, which usually we need to record this one in our balance sheet or statement of financial position. So you add 30 plus 25 plus 40, that is 95. So this 95, they are saying, does not usually show asset and liability split between different departments. So it means that in our balance sheet we require to see the figure of 95,000 other than splitting the departments. I think this is clear. That does not usually show assets split between different departments. So you need to add this one, for example, the closing stock. Closing stock, you add all the for the three departments, because this one is needed on the balance sheet as the inventory for the year. Then what's usually our closing stock, we want to write them as what in our balance sheet, unless we are going to adjust them when necessary. Then we are talking about the interdepartmental transfers. So what you need to do here, you need to understand these items. You need to understand how to prepare departmental trade and profit loss account on the gross profit basis. That is what we did at the first, so to understand how to do it. You need how to prepare the department loss account on the contribution basis. The contribution basis, that is this one, whereby we are worried about, we said we are worried about the allocation, what we are given, the direct costs. Then all the indirect costs are not going to be shared at the contribution basis. We don't share the, we are not going to share to apportion the indirect costs, but the direct costs are what are being allocated accordingly. For example, wages was direct, it was apportioned, it was allocated. In fact, it was not allocated because each department is responsible for its own costs. So there is no way out here. The wages, these wages, they are directly attributable to the Department of Jewelry. The same as 55,000 to dressing and 6,000 to clothing. Then that is this one that is desirable for the contribution to each section of the business to be calculated to aid management decision. Like what I'm saying, it's very critical, so that the management decisions, when they are making decisions, they are basing on the calculated contribution, on the calculated profit. Then they can form an informed decision, and that the contribution based trading and profit loss account is more appropriate in the departmental closure decision than the gross profit based statement. So this one, here they are saying the contribution based trading and profit is more appropriate for departmental closure decision. Okay, just for a moment. Just for a moment, I'm coming back. welcome back. We're saying if you want to close here, they're saying it's more appropriate for departmental closure. So if you want to close the department, what you need to do here, you use this one. This one is similar. The one which we did a 38.1. The only when you're using this method of the contribution, the method for contribution, what we are saying, these costs, they are not allocated. We don't allocate to each and every department. But what we need, we'll add the contribution for each and every, for the total contribution. The total contribution, then we less our expenses. These expenses, which are not directly related to any department. These costs, which are supposed to be shared by the departments. So that is when you want to close what? When the departmental closure, then the profit-based statements, the gross profit-based statements. The gross profit-based statements, that's the one which we were using here. So you got the two methods here, which we are supposed to have a knowledge. The contribution-based trading method. The cost should be divided between those which can logically be allocated to departments and those which cannot. There are some costs which are very difficult to allocate, but some they are easier to allocate. So the examiner sometimes will tip you to give you the method which you can use to allocate. We talked about sometimes the floor space, the number of hours worked, maybe the number of supplies or the number of orders. That a negative contribution is only one guide as to whether a section of business should be closed. Like what we're saying to say, if you have got a negative contribution, that is a loss, which means that the department can be what? It's either the department can be closed or not, or maybe you can improve the operating, the way we operate. So that is very critical. So that is very, very, very critical. There may be other factors which would go against such a closure, and others that would suggest that even departments with positive contribution should be closed. Positive does not always mean that if you've got a positive contribution, it should remain. Sometimes maybe there are some variables which need to be, there are some reasons, some factors which need to be looked upon, so that at least it becomes what? It becomes a very proper way, a logical way of managing those departments. Okay, there is active 338.1, which my friend was asking here. Here is an answer for that, whereby saying indirect cost and fixed costs. Because indirect costs, they are not directly related to what? To a certain department or a certain or maybe a certain division. But fixed costs, there are some costs which are fixed. Fixed costs usually is whether you make a profit, whether you carry out production or not, you still incurring fixed costs. So you've got what to call fixed costs. Fixed costs usually, for example, rent, where you rent, even if you sleep in your room for 1 day, the landlord will still require that rent of maybe 70 US, or even if you sleep in your room for 30 days, usually the landlord will require the same amount. They are fixed costs usually. You cannot say because I was not around for 5 days, I attended the funeral, so I need my rent to be deducted, to be apportioned by saying 5 days over 30 times maybe $770 which you are paying. Then you say I don't want to pay this amount because 5 days I attended the funeral and I was not sleeping at my room. So some costs are fixed costs. Whether you produce or you do not produce, you should pay them. We should understand that principle. But there are some costs which are variable costs. Variable costs, they vary with the level of production. If you produce more, you incur more costs. If you produce less, you incur less costs. For example, if you need to produce more cars, you need many number of engines. If you need to produce less, it means you need less number of engines. Those are variable costs. And they need more labor, which means that you need number of what? More men to carry out the business if you produce more. Those are variable costs. But fixed costs, we are saying whether you produce or not, sometimes they are, you don't know. And so net profits include them. Unlike in manufacturing company, in a trading company, the only costs that are included in the calculation of gross profit are the purchase costs. Here are the what? The purchase cost of item that were sold. Those are purchases. Those goods which we purchase for selling. That is what we want. Indirect costs and direct wages and direct expenses appear in the profit and loss account as deduction from gross profit. Because indirect costs, those costs which we're saying they are not directly attributable or related to any department. So far as the direct costs are concerned, it would be appropriate to include them in any comparison between departments because they were definitely incurred for and by the department to which their costs are charged. I think I explained this one thoroughly. However, it is not appropriate to include the indirect costs because they have to be spread across all the departments on a basis that is subjective rather than objective. No favoritism to say because your friend is working on the other department, you like your friend, then you are now allocating costs, or you are now spreading costs on favoritism, on subjective. Why? Because you want to fix somebody, or you want to favor other workers or other managers. So it is not appropriate. So you need to do what? Objective, not subjective. To favor a certain department, you are destroying the company, the organization as a whole. The organization cannot work well. That you cannot be certain that if you cannot be certain that they will engage impact of the department with their child. So the other, if you are not sure, the better maybe you allocate to after maybe the profit for all the department. Fixed costs can be direct expenses, e.g. list of cash registers or indirect expenses, e.g. rates. They are a period cost for the business. They cannot be changed in the time scale we are looking at. So this one is clear. Like what I have explained, to say the fixed costs, these ones, they cannot be changed at that a particular time. To say you wake up to say because I went to sports for 5 days, I did not sleep in your room, so I'm no longer interested in paying $30. I want to pay 25 because $5 is for the days, which minus $5, which because I did not sleep. Don't do like that. For that period, that's why they are called period costs. Because on that particular days, you should pay that rent or those rates. So they're saying the results in charges that are at base and close approximation to the extent with the department merit than the level indirect costs and this. So oftenly sorry, ladies and gentlemen, I don't know who muted me. Hello? Hello?
Hello, sir. Go ahead. We are hearing you loud and clear.
Sorry, I don't know. Let me try to ensure that no one will mute me. Somebody muted me. I was talking alone. Okay, I was here to under the just to wind up to say I was explaining to say why is it important sometimes, because you find out that in a department some of the costs, like indirect costs, they are indirect costs usual and fixed costs, they are very difficult sometimes to ascertain, and they are very difficult sometimes to charge a certain department. So what you need to do for practical purposes, you as an accountant, you need to be logic. Don't be subjective. You need to be objective. Don't favor any department. What you need to do is to make sure that when you are spreading those costs, you need to make sure that you are doing it for the purpose of the organization to produce so that the organization achieve its objective. So don't just be subjective. You find out that the other department, you can say it's making loss, but it's not making loss. But the problem is that that department is not what that department is facing a problem of absorbing the cost which is not directly supposed to be absorbed by. You don't use more space, but you are paying more rent, but you are not using electricity, but you are paying those electricity. That department can be affected by that. So we need to be very careful. Then we're saying, if you find out that the department is making loss, we are now going to the practical aspect, which is very critical these days. You find out that the hairdressing is not doing well. You can come up instead of, because if you completely close the hairdressing, there are some fixed costs here which are supposed to pay. And these fixed costs, who is going to pay them? So you cannot just completely close the, because this 15,000, the contribution, at least it contributed to some of the to some fixed costs here and the indirect costs. So we are saying because of that, you might decide to improve the operation of that hairdressing, or you might come up with the other department. For example, they are saying catering here, the restaurant department, or you can use that floor space for the other areas, for the children or other things. The floor space can be converted to contain chairs or other things. Those are the suggestions which you can do. Because if you say you are now closing the department, remember, if you close, so those are factors to be considered before closing the department. You should consider to say, if you close that department, who is going to control? Is that department not going to affect the overall profit of the business? Because it can affect the overall profit of the business. For example, here, let's say you decided to close the hairdressing department. What it means, if you add some of the costs here, like administration, air conditioning, some fixed costs, those fixed costs, you might find out that at the end of the day, they're supposed to be paid whether this department is there or not. Then you are increasing more burden on clothing and jewelry. They need to be very careful before you take a decision of closing it. And you should make sure that what you need to do, you should come up with other activities which can substitute that loss-making department, so that the fixed costs, they can be what? They can be spread across those departments. Because if he closes it and he won't replace it, it might be a very big problem again to you, because the fixed costs won't be covered. But at least this department has got a dressing, has got a gross profit. So you should not just quickly remove it, because some of it can also contribute to the payment of some fixed costs. So you should determine those, consider those factors before you close it. Then you find out that maybe that department again, you can improve its efficiency. How do you improve its efficiency? Maybe the management, you can talk to the people, the manager of that department. What are they doing to it? Advise them according, control the costs, or maybe you can do maybe a robust advertisement, so that maybe you can attract more people to come to your shop and other items. You don't just close the department. Any other questions? Any other questions? But I want to give you some just a work to go and do. Any question? Any question? I think this is it's not that difficult, it's simple. Hope you understood what we're saying. So if we don't have question, what I'm going to do, I'm going to give you I'm going to share with you this book. But I think you've got this book, Frankwood one. Just a popular book, this one. Just a popular book. Go and do the practice for 38.2 year. J owner. Just do the practice. The proportion of the total flow are occupied by each department was Department A 2/5, Department B 3/5. Prepare trade and profit and loss account for the ended. Apportion the cost when necessary to show the department profit or loss. The apportionment should be made using the methods as shown. They are given the method as shown here. So you can go and practice this one and practice again this one, 38.3a. Except as follows: expenses are to be apportioned equally between the departments. Delivery expenses to sales. So you look on sales here, commission 2.5% of sales. So the sales which are going to get, then 2.5% of sales. Salaries and wages, 3:2:1. So you need to find the total ratio, 3 plus 2, 4 plus 1, 5, 3/5 times the sales. Discount received, 1% of purchases. So you calculate 1% of the purchases. So this one I think is straightforward. So any questions? So that I give some of my friends the time to go and finish off their assignment. I had one of my friends was saying, I thought I would finish today. Why don't you think than us? Any other question?
Hello, sir.
book pa WhatsApp.
Madi? Opa WhatsApp book?
Yes.
Ndokupai.
Oh, that one is Frankwood 10th edition.
No, ndonga ndi latest. Njakupai kana latest. Njataka. hapana latest of edition chatsvaga ndichakupai latest. Hello?
It's okay, sir. Then I wanted to ask for these recordings. Akune 13th edition.
Vechidiki munochera kama munenge muchine energy yakawandisa and you research widely and Hello, colleagues. Hello, sorry. Unfortunately, the networks, I was booted out of the meeting. I don't know what happened. Sorry. So I'll share with you the book. Then we'll meet next time. Goodbye.
Oh, goodbye, sir. Thank you very much. To really enjoy the meeting with you. May God bless you. Stay.
Thank you. You're welcome. I'll share with you the book. Then you just practice those questions, so that for the examination purpose, then for your for the future reference, maybe.
Goodbye.
Some of you are managers. You have got your own business, so it might help you not only about the examination, but help you in your life.
Okay, bye. Goodbye, everyone.
Yeah, goodbye. Indiano kwa ruta uriza Indiano. Gwera.